Good evening everyone, and thank you for joining today's session. Our topic for today is working with net operating loss, tax losses and credit. This is a crucial area in the tax reporting, as the NOLs and credit not only impact how the company manages, but the tax income also plays a key role in effective tax planning and compliances. So in today's session, we are going to explore these elements that are automated and managed within the TRCS, making the process more accurate and efficient. I'll also like to mention that this session is being hosted in collaboration with the BISP Solutions, who continue to contribute to knowledge sharing and practical learning in the field of tax technology. So let's get into our session. Okay, so these slides define that what NOL automation is and when a tax loss exists. It explains that the NOL automation module is used to configure rules that automatically defer current year losses, utilize prior carryforwards, and expire old tax credit. It also notes that the system supports parent tax calculation entity only when the parent account carry the losses, credits, and the automation applies to the both national and regional calculation. So why does it matter? We can ask ourselves. So it matters because it automates the repetitive error-prone Excel calculation, right? That is our carry forward limits and expression, ensures the consistent application of limits, that is percent amount, etc., across the entities and jurisdiction, reduce the manual journal adjustment and the audit risk, right? So here we can say that we can take an example that if a tax income after loss is 35,000, right? Hello. Okay, so if the taxable income after loss is negative 35,000, you can define a rule to defer that the carry forward up to 35,000, so the current tax payable becomes 0, right? So the defer percentage is 100%, right? We are gonna see in that application itself. Now here the actually in TRCS NOL automation screen, which account is displayed, right, at a base level descendant that we are talking about. Is it tax loss, the CFS total, or the tax credit total, and which rule output you will see, that is for example current provision automated or etc. It also lays out the precedence rule that determines how limits are applied, right? So these are some important UI or the behavior points, that how the current provision automation column shows the post automation result for the base accounts, that is under tax losses, CFS total, or the dependent field only enable when the utilization flag is checked. That is you must enable the utilization before you can enter the utilization limits, right? Then we have precedence rule, which is actually critical. You have to memorize these. The tax income limit fields, that is the percent and amount, have the highest precedence when utilization, or if both percent amount are entered for the tax amount, tax income amounts take precedence, that is the fixed amount limit beats a percentage, right? If nothing is entered in the tax income field, a system consider the utilization limit. So in this, the precedence control exactly how much of a carry forward and can be used in a year. Misordering or entering the conflict values will lead to unexpected utilization. Always document if you use amount versus or the percentage, right? Okay, so next one is our that is a defining of NOL automation rules, right? So this is a step-by-step instructions to create or edit a NOL automation rule in TRCS. Where to go, right? Security requirement, how to add a rule, and what choices are available. That is the deferral, utilization, or the expiration that we are gonna see in our application itself. So here the security, you need administrative power, right, or user right to define the rules. Okay, so from home you go navigate to the application, then to the configurations and the NOL automation. By default, each base account has one rule to another, that is action, then add rule, then add a new row appears. You can select a target from which you have to bring the value itself, or you can select one or more calculation method, that is even deferral, utilization or expiration. You have to specify the entity that you are going to include or exclude, that help make the rule apply only to certain legal entities, then to save the rules, right? And here we have our different tags. So the system calculates the amount of eligible to defer as the absolute negative taxable income plus any manual tax loss carry forward entries, and then applies the deferred tax percentage you set. If the deferred tax percentage is 100% and the taxable income after loss is 35,000, then the system will create a carry forward of 35,000, right? If it is set to the 50%, that will be half of it, that will be I think 17,500, right? So we can say that if you choose the deferral percentage according to your need, like if you need 10%, then it will be 3,500 instead of 35,000, right? So the tax credit deferral must be entered manually, so the TRCS will not automate deferral or the tax credit account, right? Then we have our utilization rules. Alright, so in a utilization rule, explain us how to set up the utilization rules. So carry forwards are applied to current positive income, how to specify multiple carry forwards account and their utilization priority, and the two criteria that requires for the utilization to trigger, that is that the entity must have a positive income, and you can say, or the loss must be available to utilize, right? So utilization priority is mandatory and must starts with the number 1, right? Incrementing for additional carry forward accounts. System uses priority order when consuming multiple CF accounts. Then we have utilization limits as well, that is first apply the tax income limit, that is percent or amount wins if both present. If no taxable income limit specified, apply carry forward limits to percent or amount, again amount wins if both are present, right? So if taxable income is 1 lakh, that is positive value, and a priority 1 balance is 50,000 and a priority 2 balance is 40,000, so the utilization limit will take 80%, max utilization 80%, right? So system will use 50,000 from this priority 1, then take 30,000 from the priority 2, and it will actually leave I think 10,000 itself, right? If we take an example, this might be complicated as I'm not telling you on the application, but just wait and we will in 4 to 5 seconds we are just going to switch it to the. So this actually has what the mechanism works under the expiring of tax loss on the credit here, right? So let's get to our application now. So here's our application. Before starting, let's go that from where from which point actually we configure our the NOLs or the taxes, right? So we are gonna go under the overview, and here we will go to configurations. Okay, now it's been loaded. We will go to our NOL automation, right? So this is where you configure the rules for how NOLs and the other tax attributes are carried forward, deferred, utilized or expired, as you can see here the logics, right? For reporting and automation purposes, it ensures the TRCS automatically applies the tax rules. For example, that US NOLs are 80% limitation, state rules, credit expiration, etc., instead of doing the manual Excel based adjustment. Right, so the top section here you can see includes scenario, years and periods. That is a POV, that the scenario is actual, mean the setup is for actual date, that year is for current, that is the fiscal year right now going on. We have taken here as FY22. For period we have taken P12. So this is a setup for our POV, right? Then for the main table, you can see there the tax attributes. You can see here the tax losses, capital losses, charitable contributions, national tax losses, foreign tax credit, general business credits and job credits, right? Now we have different logics which actually shows that which rule set is applied. Here it's annual rule 1 for all, right? Under this, each attribute can follow a different logic if needed. If checked in deferral, if we checked it, the system will defer losses and credits to future year. If we check the utilization, the system allows the applying available of losses and credit to reduce taxable income in current year. If we using the expiration, meaning if we check the system, that will apply expiration rules. For example, it will expire after 5 years, 10 years or 8 years, right? Whatever we. Alright, the next one is our entities. So you can include or exclude certain legal entities or the tax jurisdiction. For example, you include the US nationals, exclude foreign subsidiaries if the rule applies only to domestic, right? You can click here and see it will load a table itself. You don't have to type anything. Then we have our limits, that is a deferral limits, utilization limits, and this utilization limit, that is carry forward actually. So the deferral limit refer to the maximum percentage of loss credit allowed to be deferred, right? Under this, and under the utilization, it's the maximum portion of taxable income or tax liability that can be offset. Under the utilization, carry forward restrictions how much of carried forward can be used in a given year, right? So putting it all together with example, we can say that for example, we are applying logic that is annual rule 1 with the deferral and utilization, right? And the expiration, we can take the 20 years jurisdiction, that US nationals, and table the utilization limit that 80%. So it means that if we have a we have a 1 lakh actually loss, then we can actually carry forward to next year in the US nationals, excluding the subsidiaries, right? Rather than taking a live example, let's do it. I will actually duplicate this tab, as we are gonna need this configuration. Alright, under this we will go to our tax provision national and click on our package. Then here in the packages, we will go to the current provision right here. So before doing anything, let's run a consolidation. So if we have edited any data in our past practices, so it can actually show the effect before we do it here. Because if we don't consolidate it at once, it will show that all the edits we have done and saved all together in one file. That will create a mess. Okay, so the consolidation is done. So now you can see here that here we have a taxable income, that is 319 million and 21,000, right? So here you can see it. So if there is positive, that means we don't need any NOLs right here. If we need it to be negative, right? So let's actually make it a negative value. This one, the taxable income. So actually if it's positive, the NOL doesn't work or the tax credit works, right? As we are in profit, that means so we can pay it up. If the taxable income is negative, that means we can use it to and utilize it to actually deduct our future tax that we are gonna pay. So let's actually put a value. Okay, we will save it. Okay, I think we should add one more zero, so it will go in negative. Just a minute. Okay, so we still have 1902. We don't have negative value, so we will take it to 35. I think that should work. Okay, so we have now that is a negative, that is our loss actually. So we are just gonna run the rule first, so we can see that it is still showing the loss itself. We're gonna launch it. If we have the positive values in the taxable income, then no worries, you don't need NOL, right? But if you have a negative value, that means we can carry it forward, that we can actually save tax money, right? For example, you have a loss of 10,000, you can carry forward it, but in next year you have a profit and you have to pay 5,000 tax, so some of the portion is deductible from that loss itself. The portion from the 1500 from the portion of 5,000 is deductible, so that means there is 8,500 still left of the NOL that can be utilized for 4 more years, like that, right? So here you can see the value has been shortened, that is now 843,000, right? So now let's go to our configurations, and we will take the, before that let's actually, let me show you, let me run it for 2023 also, and I will show you that what is in 2023. I will just make a new page. Okay, so now we will again go to our tax national package. Let it load, and here we will load it for 2023. We will load it for 2023. Okay, it's been loaded. Now I will run the rule. From here I'm gonna run the rule for this 2023 post consolidation. Okay, we're gonna select FY 2023 and we're gonna launch it. So until the time it's consolidating, let's talk about this. So here you can see under our total national tax losses, under carry forward automated, we have 0 tax losses, right? So here is nothing right now. This box is for adjustment, as we are on an entity input, so we can actually input it manually ourselves right here. So I think it's gonna take some time. So when we apply the configurations, that is this one, it will take this value according to the percentage. If we take 50%, it's gonna take it's gonna show us here that 4 lakh 20,000 4,000 420,000 something around amount here and here. Like we are taking half of this into the next year itself. If we are taking half of it, if 100%, then this will come here 0, and here it will come whole 843,000. I'm just gonna show you if I will just, if this finishes with the consolidation. Let me open one more tab so I can switch it up to jobs, so I can see that what is the current progress. If it's taking time, that means if it takes more than a minute, then it's gonna show you that it will run in background. So from the home page you can navigate to applications. Under application you can go to jobs. So you can see that what is that, the current working or the progress of the consolidation or any other thing that you have run itself and hasn't completed. See, it's still processing. If we will refresh it, if there is an error, you can even click on it and go and see the error, that because of what it is happening. It's gonna take more time than I thought. Still processing. The EPM itself take a lot of time to load the data, so we will wait for a few minutes. See, it has actually told us that the business rule execution time limit has exceeded the maximum configured time, wait time. So business rule will now execute in the background. So it hasn't been executed yet, it is running in the background. You can see it from here, the jobs. See, let it run. So here you can see that there is no actually carry forward, right? So there is no entries right here. So to make this, as we have already made the value negative here in the taxable income, that the income is in loss. So here we will go on the deferral, we will click right. Under utilization we will click right. So here it's asking that do you need a 100% amount, or do you need how much amount do you need, right? So first we will take 100%, and here we will set the priority to 1, and we are going to save it. It's still taking the time. So the data has been saved here. Now here we will go and run another job, that is the rule or the consolidation for our current provision FY 2022 P12. So it can show the difference, that how it's actually gonna be shown. Okay, so it's the 2023 one now is also completed. I will just refresh it once. We will see if there is any data. Okay, so no changes in data. Alright, we will wait for this one. Okay, so our forced consolidation was a successful. So let's see that. Okay, it's right here. We are gonna refresh it once. We are gonna go to our FY 2022. We are gonna close it. Let's refresh it. Okay, it's so here you can see the taxable income here. First was it was negative, right? Now it has negative 843,000, but now it has actually become zero as we are taking 100%, right? So it has been automated under the carry forward under the tax national losses. Here we can see tax losses carry forward automation. Now we are going to run the consolidation. We are going to come first on our year 2023 so that we can see that what effect has it actually put on. So if here you can see there is no effect, so we have to actually run the rule. So we're again gonna run the rule for FY 2023. Then we are gonna do actually in a partial way, that is instead of taking 100% we will take 50%, right? So you will get a like clean inside that how it actually works, and if you need to take a specific amount, what amount you can take. I will first lead with the percentage and then we can see the amount itself, but I can actually tell it from you from here, right here. Okay, for example, if you are taking here until the consolidation is running, I'm gonna tell you the annual automation. For example, if here's a percentage, you have taken 50%, right? And here you have taken the amount that is 50,000, right? So if the total value is 1 lakh, so or you can say 1,20,000. So when you will run the automation from here, it will take the amount that is 50,000, right? So it will deduct 50,000 from 1,20,000. That will be shown here in the tax in the national tax losses, right? And if because we have just studied that amount always win if that is a percentage versus amount under any utilization limit, right? So that is how the amount works. We're just gonna see it that how let's first we will go with the partial one, then we are gonna go with the amount. At least we can change the percentage so that we don't have to do it later. That's taking so much time. Control C, Control V and Control V. Alright, we're just gonna refresh this so we can say that what is the progress right here. Still running. We will wait for it. So here you can see it has again shown us that the execution time has exceeded, so we will leave it. We'll just refresh it once so that we can see that okay, so now that means it will take a minute or two more. Alright, so we will save this configuration now. Okay, it's completed for 2023. Alright, so now here you can see first it was 0 here, but now we have the amount from 2022 that we have actually automated, that has been carry forward. Here you can see that we have utilized 100% value, that is it remains 0 here. It actually carried forward it 843, that is 843,000 to our next year, that is 2023. Right here you can see it here, the changes. So right now I'm gonna leave with that consolidation of year 23, as you have seen that it will be shown right here, and further this amount will be deducted from the tax income before loss, taxable income before loss, and then the taxable income will come here. We will follow the same procedure for 2023, right? Or I can actually go, I'm gonna run another one of the rules, because we have taken 50% here instead of 100. So I'm gonna run it for 2022 first. Okay, much. So here the losses are that if you have a taxable income in negative, that means you incur a loss. Right, you take it forward, carry it forward, so that you can deduct the tax, if you have a tax amount from it, right? So under this we have expiration and the credit, so that the loss amount, the tax loss is the credit from which we can actually you can say that we are getting a discount, that because we are deducting it from that the tax, we are deducting some of the tax amount from it, right? And expiration refers to that for how much time period it's actually available. That means, for example, if we have a here we have a loss of 843,000, that means for how much time period it is, we can say that till 2024, that is 3 years, right? So we have actually run the automation. We will run one from here, and then we will go to our actually FY 2022, as it will take time to load. I mean, it will take time to configure. 2022. So here you can see the amount has been actually half amount is showing. So the taxable income is in 0 this time, as we have taken 50%, right? So 50%, that means for 421,000, right? So if we run the consolidation for now, the 2023, or we actually, it's gonna take time. So instead of running consolidation, I will just tell you that this amount, after running consolidation, this amount will also be shown here. Instead of 843, it's gonna be shown here that 421,000, right? So now we will take here the 100% again, but with the amount. Here we will take 1 lakh. We will save it. First we will run the consolidation. If it is saved, okay, it's saved. Now we are gonna run the consolidation for FY 2022. Okay, it's already selected. Let's launch it. We will wait for it to load. Okay, so the consolidation is actually completed. Let me actually go. Okay, so we will go again to our 2022 year. Okay, so here you can see that it has taken again the 100%, right? And I think in the next year, if you just run the rule here for 2023, we are gonna see that the amount that we have deducted here. So actually this was all the things that are actually under the LO, the just a minute, the NOL, that is net operating loss itself, right? So if you have any other question regarding this, we are actually not I am actually, due to some problem, it is taking us so much loading time, that's 5 minutes for just consolidation. I can't actually show you on the another year. So but I have actually told you that how it will actually reflect in that specific year and where it will reflect, right? And we have actually done it to a full 100% amount through 100%, then the partial percentage, and then through the amount itself, right? So this was all for today's NOL session and the credit and tax law session. If you have any questions or any doubts, you can comment me in the comment section, and I am gonna clean it and I am gonna clear it out in the next session. Next session we are gonna take about these logics, different logics. I have already taken one, but I'm gonna take again, as due to some that day we were I have not shown that in your practical way, right? So in tomorrow's session I'm gonna show you it in practical, that how it takes the value from one place, in what manner. Is it changes, is it the actually half amount, partial amount that we are talking about, or if it is that it is taking it from somewhere else and just telling us the changes in it, right? So thank you for joining today's session, and we will meet in next one.